Hello and welcome to today's podcast. So I was at a meeting today with a bunch of entrepreneurs and investors, and one of them said something that really intrigued me and made me want to record this video. So we were reviewing a bunch of startups, and there was a question on the table about whether it is important that some of these startups were not yet profitable. And one of the VCs at the table said something that really intrigued me. He said that for VC-backed companies, immediately when they start, profit is not an issue. They are not, looking at them and reviewing how much profit they're making. What they are concerned about is traction and growth. So basically, the question or the title for today's podcast is whether it's important to focus on profit when you start. So profit versus growth, profit versus traction. And when he said that, it really intrigued me because I have held that view for a long time that when it comes to startups, growth and traction is more important, and that profit will come later. As long as you have a growth plan that you can implement that will not swallow all your cash, you can keep growing and not focus entirely on profit. But given what has happened with my company, Gift Card Rescue, over the last 7 years, and some of the near-death experiences that I have had with the company, my opinion about that issue has drastically changed. I believe that if I was to go back and do it again, I would focus more on profit first. Because there are several reasons over the years that I have realized that being profitable has great advantages, especially if you are profitable and growing. That's even better. That's where you want to be. You want to be growing, but you also want to be profitable. So my profit first philosophy is based on growth supported by profit. And there's some people who say, if you're growing and you're profitable, if you kind of give in on the profit, you can grow faster. And that's true. And that's what I'm saying, that it seems like for VC-backed companies, that seems to be what they are interested in. Well, that has been what I believed before, but I don't believe that now. Even though my company is not VC-backed, I used to think that growing faster was more important. And now I don't think that's a good idea because of what I've experienced. And there are several reasons why I feel this way. The first is that if you are focused on profit, you are forced to run a lean operation, because profitability means that you're watching your cost, you're watching your margins, and you're making sure that the bottom line, everything that you're doing, everything you're spending money on is affecting the bottom line. So it makes you run a very lean operation. And the good thing about running a lean operation is that when times are tough, you're able to ride it better because you already run lean, you've trimmed the fat. So you're able to weather the storm better. So that profitability mindset forces you to run a lean operation. And secondly, it also makes you be conscious about cost. So the stuff you're spending money on, expenses, you're very conscious about that and what you're spending the money on and what the outcome is. So when you're profit focused, you want to be spending money on things that impact the bottom line. And so every additional project that your team comes up with, or every additional thing that they want you to buy, or all these things that you want to spend money on, when you're profit driven, it forces you to look at that and see this additional spending, how much is that going to affect the bottom line? And that's very important. So being in that mindset helps you measure and assess things you're spending money on in a way that continues to improve your bottom line. The third reason why you want to be profit conscious is that your financing options all of a sudden become very, very attractive. When you're losing money, or you're burning cash, or you have a burn rate, your financing options become very limited. For instance, banks become very jittery about putting money into a company that is burning cash. So your debt options become very expensive. There are companies that will loan to you even when you're losing money, but your interest rate becomes very, very expensive. Your cost of capital becomes very expensive. So it helps when you're making money because banks find that very safe and attractive. Of course, the risk there for them is very, diminished. So they're willing to lend you that money. So then you can tap into bank loans, lines of credit, bank credit cards at attractive rates. And then you can also tap into the equity market. So you can go to angel investors and VCs. Now, it's ironic here because if you're growing and you're profitable, it's easy to attract VC and angel money if you can tell a story of how you're going to continue growing. Then they're willing to come in. So being in that position of profitability actually also helps you attract better equity capital because you don't need their money. They know you don't need their money. They know you can survive without them. So they know that if you're coming to them, you're coming to them because of a bigger plan. And so they're willing to put in the money because they know that you don't need them. And if you're coming to them and you have something big that they want to be part of. So that is very, very important. So that's number 3. Number 4 is that you're able to attract talent. If you want to attract top management, skilled personnel, they want to also be secure in what they're coming into. And it helps that you're a profitable company. Now, it doesn't mean that people are not looking for challenges. A lot of people go into businesses where the business is struggling or the business is not profitable yet, but they see the vision and they believe in it and they want to rally around that vision, or they think they can make a change themselves to help move that vision forward. That's good, and that happens. But what I'm saying is that being profitable helps you attract talent because people come into your company knowing that it's a very safe place, that their jobs is not going to be in danger anytime soon, and that they're coming to an environment that they can contribute towards something that is growing and they can be part of that growth story. So being profitable also helps you attract talent. Now, it also puts less stress on your team because if you're running a business that is burning cash, you tend to go through a lot of cycles, roller coaster, depending on how much cash you have. Your team level stress is measured according to that. And so you find yourself running these drills because you're running out of cash for payroll, for expenses, for paying suppliers. All those things come into play, and you need to, weigh that against whatever satisfaction you think you're going to get out of rapid growth when you are fighting day to day just to make cash payments on things and obligations that are due. So your team eventually gets a lot of stress out of that if you're always fighting a fire about cash. So in my opinion, I would rather be profitable and ride that trajectory than be in this situation where it's payroll and I'm trying to finagle things and move money here and rob Peter to pay Paul to be able to just meet payroll, and then you have to do it again 2 weeks later, and that's not a fun place to be. So that's something that you need to think about when you're trying to compare your profit potential and your growth potential. And I'm saying that there's a way to have both. And then also, if you are profit focused, your investment into the company becomes something that you can take back later. A lot of us go into business and we put everything into it. Our savings, our credit cards, 401ks. We take out all these personal debt and friends and family rounds. All these loans that we've taken. If you're profitable, you can start paying that back sooner. And also start paying yourself back for all the sacrifice you've put in. You can start taking money out much faster. But if you're delaying that profitability timeline, then you're also delaying when you can make all those payments whole. And you never know. There are people who put their money into your business, not sure, whether they're going to get it back. It's nice to be able to just return that money to them sooner than they thought if you're running your business in a profit mindset. And finally, you sleep better. Let me tell you, this is something that I have a lot of experience with. I have been through several of these roller coaster rides with giftcardrescue.com. And I remember, some time ago when we hit one of those rough patches, I couldn't sleep. I would sleep and wake up at 2 a.m. because I am waiting for that bank statement. You know, our bank transactions turn over around 2:30 at night. And so I naturally wake up in panic, and the first thing I do is log into the bank account on my phone, trying to see if we have money. You don't want to be in that position. It is not a fun place to be, especially when you have a company our size where we're growing and we have large payments to make to suppliers, to make to employees, to buy everything. Operating capital, operating cash. And so you don't want to be in that situation. You want to be in a situation where you're spending your energy on things that will grow the company and move it forward. Not spending your night panicking about where money is going to come from to meet your obligations for your business. So I've been there. I know how it is. It's not a fun place to be. Trust me. You don't want to go there. And so I think that the best route is a profit route. When you get out of the gate, make profit first, your focus, and drive your business towards profitability as soon as you can. Do not follow this, because the other thing we need to talk about is that very few companies get VC funding, maybe 5% at best. So the other 95% are looking for other traditional sources of funding to drive the business. And those traditional sources, the other places that you can get money, the banks, the friends and family, and all these places, the criteria are much more stringent. And it helps if you can show that you're making money. If you're profitable, it helps your story a lot, because people want to put money where it's safe. You know, even though it's a risk, they want to know that it's not going to disappear tomorrow. So you should know that if you're chasing that story that you see in the business publications about, companies raising Series A, Series B, Series C, and all that stuff, that may not be your story. And if that is your story in the future, good. But being profitable does not hinder you from being able to take investment from angels and VCs later. Being profitable actually makes you attractive to them. But being unprofitable closes some of those attractive funding sources to you. And so you end up in a situation where you need money and it's difficult to raise money, and the one that you can raise come at a very high price. And that then continues to deepen your situation and worsen your situation. And it's a rabbit hole you don't want to go into. So that is my thought on the issue today. As I said, it was a conversation that happened today, and I had to record a video about it. I am not saying that my opinion has formed fully on this, but one thing is for sure. If I was to go back and do it again, I'll be a profit first kind of person. But of course, there are a lot of intricacies in this topic that I'm going to address later. But for now, this is where I stand, and I hope it's helpful to somebody. So thank you, and subscribe to our channel.